I want to tell you about a new podcast called Amuse News. Publishing multiple days a week, Amuse News is your source for food news, interviews from around the food world, and more. On the show, we'll be engaging with food storytellers, from chefs to advocates to people working in the field, and many more. Find Amuse News wherever you get your podcasts. Amuse News is a destination for everyone who's looking for a new, insightful look into the world of food.
You're listening to Heritage Radio Network.
You're listening to Heritage Radio Network. HRN is food radio supported by you. Learn more at heritageradionetwork.org.
Hearst Ranch is a proud sponsor of the Heritage Radio Network. Learn more about Hearst Ranch at HearstRanch.com.
I'm Allison Kane, and welcome to In the Sauce, a podcast about building consumer brands from the ground up. I love doing this show because I get to interview everyone from production gurus to marketing and social media mavens, anyone who can guide me on this crazy journey. This is the story of building Haven's Kitchen sauces, but it's also the story of every growing brand because we're all in the sauce. Today, I'm speaking with Anna Whiteman, principal at Coefficient Capital, a multi-stage investment fund focused on consumer and technology investments. Forbes named Anna 30 under 30 for venture capital. Entrepreneur Magazine named Anna to its 100 Powerful Women list. I didn't even know that was a thing, but that's rad. And Business Insider has named Anna as a rising star in venture. She's also the founder of a top national networking group for female founders and a huge supporter of early stage founders and brands. Welcome, Anna.
Thank you for having me.
Well, we've been talking about this. I've been, I think, kind of like trying to get you for a while, and you're like, maybe
I might. Even remotely. This has been on my bucket list. This is now going into my bio.
Amazing. Yes, exactly. Forbes 30 under 30 and a guest number 230 on In the Sauce.
Thank you.
Okay, so we talked about doing this. We wanted to debrief after Expo. I feel like there's like more than we need in terms of like trends that we're seeing and bright colors. But what I really want to do, if we can, is do it from the lens of an investor. And partly because obviously I'm always interested in the lens of yours. But I think that you do a really amazing job bridging the sort of VC perspective with the empathy of someone who talks with a lot of founders. So first off, are you recovered from Expo West? And do you think those numbers about COVID are real?
I am recovered. I think I'm one of the rare people that feels more energized and more excited after Expo than not. So what were the COVID numbers?
I don't know. Who the hell knows? You know, it's like 68% of people who landed from LAX on March whatever had COVID. I don't know. Wow. You hear stuff. You didn't know me when I had little kids, but I don't know if you know young parents, but there's this sort of like when your kid starts nursery school, the first year that they're in school, you just get every virus imaginable. You spend half the year like throwing up and like taking decongestants and you're just a hot mess. I feel like everyone I know had someone on their team get sick, COVID or not. Yeah. And it was usually people who had not been to Expo before. And so I'm like, I feel like maybe it's like the nursery school thing. I don't know.
Yeah. Well, that also would suggest that like I've developed some antibody against like, whatever floats around the halls at Expo, which I definitely have, given this was my 9th Expo.
Yes.
I think I'm decently recovered. I mean, I get the question a lot in my 9th year of like, what's the best way to prepare for Expo? And I think I have like a little bit of a short list that I'd love to share with you if that's available or if that's doable. My like tricks of the trade for Expo is number one, the most amateur move is to show up hungry. That just sets yourself up for failure. I eat like like a Super Bowl sized meal before I walk into Expo, so that the things
What is
that
your,
I
like, do you
try.
eat protein? Do you carb load?
Yeah, it's like a big omelet. It's like a farmer's omelet, like one
Okay.
with all of the fixings. So it just I logged, I think, 35,000 steps this year at
Wow.
Expo. So you're gonna burn it off, and I'm not worried about, just carb loading before the event. But I think
Right.
it makes it such that you have such a high bar for what you're gonna end up sampling that it keeps the day manageable.
Yeah.
Yeah.
Well,
I
next
have-
year
I
I'm
have
going to
way more.
host you, I think, for my pregame episode.
Oh my God.
And I
nice.
guess, I mean, now that you've said that, 9 years, I mean,
Yeah.
before we get into sort of the stage and the categories that you look at with an investor lens, like after 9 years,
Yeah.
was there anything just like super top of mind that made this year different? Really just one big theme or thing, not necessarily like we saw a lot of regenerative agriculture, but like,
Right. There was, I think what was really refreshing this year, and if you recall, last year was the Thursday of Expo was the day that SVB that news hit, and everybody was behind their booth scrambling to move money around. So last year was a little wonky, but I would say the rest of the years have been really focused on like bleeding edge innovation and maybe form factors or product formulations that were so novel and almost like hard to comprehend. And this year, the thing I found so comforting, the theme was that like it was back to basics for me. It was very much like, like carbs are not the enemy. Like there was a lot of center of store.
Sugar's not the enemy. Yeah.
Sugar's not the enemy. And it's like ways to work with these things rather than against them. And I felt that it was just kind of like a return to pragmatism, which didn't really come at the expense of like fun and happiness and joy. I think like a lot of the branding and the colors and the energy, frankly, of everybody around their brands and their products was so high. Yeah. But I think it was because it was this like return to basics, this return from Wonderland, and there was like a rationalization that felt really healthy and good, and it felt comprehensible to walk around rather than like, oh my gosh, like what's around the corner.
Yeah, well, I think actually that's. I wanted to ask you about coefficient, but I want to let's continue with that for a second, because what I really wanted to get into a little bit is on that note, I feel like there was a lot of innovation for innovation's sake in the past several years. And I also feel like, to your point, there was like this almost, we're going to make these things that the consumer is not ready for because the world should have it. Right. And that feels like, again, going to your word pragmatism, that feels like maybe people started realizing that maybe the world does need it, but if the consumer isn't ready and the money isn't flowing to prop it up until the consumer's ready, maybe we back off of that and find a middle ground. Is that kind of where maybe what you think happened sort of before?
Yeah. To riff on that point a little bit, what I could infer from a few founder conversations of brands that were not kind of in years past over promising and under delivering on like a product function or like an effect that it would have, was that there's this feeling that for founders that the playing field has almost been leveled a little bit because capital itself, like from the investor point of view, frankly, the capital itself was an unfair advantage and continues to be. Like that's the reality. But when there was so much less capital availability over the last 2 years, it kind of feels like you had a chance to compete more on product quality, integrity, brand things that, money cannot necessarily buy or create for you. So I think there was like a level of almost relief from the founder conversations that I was having, that they were no longer going up against an insurmountable obstacle in a competitor that just had endless access to capital. So I think that was an important point. So that allowed people to focus on the basics, on their product itself. But
no, it's such a good point. There were people making plant-based things, but they didn't feel like they were competing against companies that raised $150, $200 million with 14 people on their marketing team. And they felt a little bit more like, okay, everyone's talking about how the category is suffering. The category is actually kind of okay in a lot of ways. Right. And it's just not necessarily what the investor world bumped up the category to look like it was going to be. Is that a fair way to say it?
Yeah, I agree. And I think there's just been otherwise. And I think smart investors have to realize this too, that there has been kind of a movement of people to like premiumization of everyday things. And that doesn't mean, a tea that can grow your hair and do all of these other extracurriculars.
Kind of like a really good flavor, better for you aioli in a pouch.
Something like that.
I don't know. Maybe just throwing it out there, premium.
It really is. And I think there's like a reframing that goes on in people's heads where that is maybe a trade up from the, spices or condiments that they were using before, but it's also cost save when you look at it against a night out at a fancy restaurant. And so I think there's just been this healthy middle ground of where the reality of the economy has met what brands are building around, has met where, consumer, like specialist consumer investors are actually putting money behind. And I think that sort of like harmony was what I really felt at Expo this year.
So speaking of specialist consumer investors, you guys are specialized. Full disclosure, you work with my fiance, who I know a lot about. And I think that there's been a lot of people investing in the CPG space over the last several years. I think there were a lot of angels that thought it was fun. Some of those angels have either moved on to sort of build funds, or a lot of them have been like, actually, I haven't seen much return on a lot of this stuff. And while it was nice to support a cool brand, maybe I'll just put it into bonds. So, but you guys, you focus on consumer, your expertise is in consumer and consumer tech. Tell everyone, so that your inbox doesn't get flooded, a little bit about the stage and the categories that you look at, number one, but also, why you think that specialization in consumer is an unfair advantage for you guys as a fund in a world where people are talking about how there's no more money and there's no money going into, CPG and, the sky is falling.
Right, totally. So Coefficient, as you know, we focus on kind of multi-stage growth investing in consumer, where the brands that we're investing behind use tech or kind of content to create competitive advantage. So our typical kind of early stage check size would be 5 to 20 million. We're typically looking for businesses that are north of 5 million in trailing 12 revenues, decently omni-channel profile, and all of the other kind of requisite core metrics to scale. Out of our late stage fund, we're looking for businesses that are a little bit further along the maturity curve. But either way, out of whatever bucket it comes, it's definitely what we're looking for is category winners and kind of clear outliers in whatever whatever category bucket of consumer the brand is playing in. So the kind of core categories of consumer, obviously being food, bev, beauty, wellness, personal care, household, pet. We also kind of look at marketplaces. We'll look at, areas where consumer is being impacted or or kind of catalyzed by technology in really interesting ways. So that's the core of the fund. And I think, we do this trend report, on a biannual, if not more basis. And what we consistently fall back on is that the consumer segment of the economy remains huge and healthy and resilient. I mean, it remains, 70% of GDP is consumer spend today. It's not a category that any of us feel is going away anytime soon. And I think the specialization of it is very important. I think there was a lot of interesting, but not necessarily sticky capital providers in the consumer world, as you mentioned, kind of for the last, you mentioned angels, but I think there was also a lot of like fund interest that have more or less pulled out over the last couple of years as kind of things have shifted. But the specialization, I would say, allows us to consistently just build a bench of data and comps that are best in class for what a consumer brand should look like in today's day and age. And so we're able to kind of clearly shift around and figure out what the category outliers really need to look like and what those numbers need to look like and what those brands need to look like. So I would say that's made us consistently smarter. Our data set is only getting sharper and more accurate on a day-to-day basis as we stay in this category. And I think on the kind of tech advantage point, we're constantly, listening and feeling around for what new technologies or capabilities can enable brands to be more efficient, smarter, better built than they were in years past. So I think with an eye kind of towards that future state, we consistently look for these brands that are going to be a little bit necessarily different than the pack that they're playing in. So I think that's what separates us as a consumer fund. And I think, at the end of the day, too, we mentioned a little bit of the tourist capital. Like there's an inherent
tourist
love
capital. I like that expression.
that you have to. Yes, I say it a lot. But there's going to be cyclicality in the world. And I know I'm not like breaking news to anybody, but I think like if you absolutely love consumer, which it's not hard to do, but if you're obsessed with it and making, a life of it in the way that I think we all are here, you're going to be fine riding ups and downs, and your thesis is going to remain consistent and stable.
Well, going back to that for a second. So your team, I mean, your fund, but also you personally absolutely love consumer. You love, I don't know. I mean, you seem to really love the puzzle that we're all trying to put together every day. You love the kind of, I think what you love about it, if I remember like conversations that you and I have both had and what we share, is this sort of cross-discipline thing that happens when you're building a business like I am and like you support. It's like cross-functional, cross-disciplinary. You can grab little bits of things that are floating around in the zeitgeist and apply them in different ways to building something in a completely different world. And yet, I think that's part of your personal love. But can you elaborate on like why you love it so much?
Yeah. You're entirely correct. You like have zeroed in previously in conversations we've had on the way my mind works. And it's very, it very much stems from like being a philosophy major in school and just kind of consistently consumer being interesting to me as like a student of the world. I know that's like a highfalutin phrase, but
no, totally.
I think it like I would honestly almost consider myself like a little less of a participant of consumer than just an observer of it and just absolutely fascinated by it. So to the extent that like my job function allows me to sit around people with cool new ideas for things that they're building all day and hear about that and riff with them about it. It's like there's no cooler way to spend my time, in my opinion. And I think everyone has something to teach you, and they have a reason for having enough conviction to make a life of what they believe they want to build. And there's things to unpack and why they have those reasons. And there's experiences that they've had in their life, and there's, data that they've paired with that. And I think there's just constantly something to learn. And if you're always curious about those things, just like for your own benefit and for your own curiosity, it's never gonna, no day is gonna look the same. And I just genuinely, I think the day that I don't have that curiosity or that desire to hear a story, something has gone terribly wrong.
Right.
So,
yeah. No, it's funny because, I've said this before. I think any early stage founder that's sane has thought, at some point or another, why am I doing this? Like, this is just too tall of a mountain to climb. And what has kept me kind of doing it, aside from my conviction about the products, my love for the team, all of that, is really that I don't know what I would be. I learned so much, especially just from the podcast, really, and just from every day talking to all these different people who do all these different amusing jobs, that I don't know what I would do that could be any more interesting. It's not always fun, but and you can't, it's hard to observe it if you're not in the ecosystem in some way or another, because unless you're building it or very close to people who are building it, it's like it still feels a little bit like fictional, and when you're in it, it's and you feel, I don't know, I've seen you with your founder friends, you're in it. I want to ask you one more question before the break, which is lots of misery floating around, lots of people saying no funding, consumers aren't spending, which you've just sort of dispelled, private labels taking over and brands are going to have no place, and, yada, yada. But it doesn't seem like that is your thesis. So make some founders and operators that are listening feel a little better about at least the funding piece. We're going to get into, after the break, more things that they can sort of reverse engineer for people like you, but give us some good news, please.
I am happy to be the bearer of good news. I think the first thing that I see generally, and this is like a bigger than Expo comment, but I think so many businesses have just in a what was bleak, 2 years past, have really kind of rationalized their business models, which has involved a lot of really difficult calls and a lot of really kind of big sacrifices that nobody wanted to make. But to where that's gotten us today has been, at least from my experience, seeing models and companies that are so much more sustainable. They're building so much more towards a reality rather than something that they want and they hope an investor will like to see. And as a result, investors like to see brands that build towards reality. So I think that you're getting closer alignment of where smart money wants to go and what brands are available for that. And so I do think, that paired with the fact that it has been dry and it has been, difficult for brands to attract capital and for funds to find brands to put that capital into over the last couple of years, that means that there's capital that's been sitting on the sidelines that needs to go somewhere. So
the proverbial dry powder, I believe,
the
is
dry
what they
powder.
call it. Yeah.
I try in a podcast setting to stay as far away from proverbial kind of language as I can, just because
I don't know. I didn't understand. Someone else used like an acronym for like zero interest, whatever.
Zerping.
Yeah. And I was like, I literally was like, qu'est-ce que c'est ça?
Yeah.
Like, I was like, what is that? I have never heard that acronym. And I read somewhere that asking what that means is a sign of confidence. So I did. I asked. But proverbial dry powder, I think, is just, to your point, just for anyone who's like not entirely sure what the hell we're talking about, is like funds like yours have money to put to work, and you need to look for companies to put it to work in. You can't just like hang for very long. Is that? And so it needs to be used and then explode into a great outcome, I guess, to just finish the metaphor. We're going to take a quick break. We'll be right back.
Hearst Ranch is a proud sponsor of the Heritage Radio Network. The Hearst family has been raising cattle on the rich, sustainable native grasslands of California's Central Coast for over 150 years. Piedra Blanca Rancho in San Simeon is the original Hearst Ranch, founded by George Hearst in 1865. George's son was the famous publisher William Randolph Hearst. In addition to being known for building the iconic Hearst Castle, William was, like his father before him, an avid rancher. In his words, "I would rather spend a month at the ranch than any place in the world." Thanks to one of the largest land conservation easements in California history, a joint effort with the California Rangeland Trust, the American Land Conservancy, and the state of California, the working landscape at Hearst Ranch will be preserved forever. Learn more about Hearst Ranch at HearstRanch.com.
I'm back with Anna Whiteman from Coefficient Capital. Okay, so we touched a little on Expo. That was pretty much, we could just leave it at that. There's a coming to earth, a rationalization, which also means taking things and maybe not like making them completely way out there, but making them a little bit incrementally better for you, more fun in the packaging, more convenient. That premiumization, I guess, is the word. Was there any outlier brands that you saw that you were like, ooh, that like sparked some joy?
Oh yeah. Well, there was this aioli that I saw.
I heard about it. I heard it's in a pouch,
went
right?
to a little happy hour. Yep, it's in a little pouch. Frankly, I'm not pandering because I'm on this podcast, but it was incredible. It was so delicious, and you threw a great happy hour, and you got to eat it with some tortilla chips and a margarita, and honestly, one of the highlights of my expo. So the aioli is so excellent, and congratulations.
Thank you.
I would say, I don't know, like there were definitely brands that sparked joy. I don't know if I've told you this, but in the past, the only things that I would really let myself sample were like 100-year-old Italian heritage brand pastas and pasta sauces and ice cream sandwiches. So
I love those. I love the people that are just like, they're from another world. My dream one day, speaking of student of the world or whatever it was, is to make like a best in show mockumentary of Expo West. Like someone has got to make, and you follow like 5 different companies. Yeah. And of course you follow like a VC fund because that would just be too funny. And then they all meet at this, like, it's like Pitch Perfect meets Best in Show, the world champs. But they're one of the people that you follow is like that company from, wherever in Italy or Spain that is making this heritage brand pasta thing, and they're cooking.
Exactly.
And they get there and they see the girls in like the orange lycra jumpsuits and the bros with the flags and the black muscle tees, and then the hippie from Oregon with her kefir. It's just too fun. It's
too fun. The character that I would add to that would be the like guy that has to dress up like a mushroom all day and is like constantly bumping into people. Yeah,
and like people are like, think he's drunk, but meanwhile he just can't see and he's knocking things over. Well, I think he's the protagonist. I think
the protagonist.
Yeah, he's like the guy who like is entering this world, and you follow his story, and he's like on the marketing team, and they're like, "Hey, Henry, this is what we need you to do for 3 straight days." I think it's great.
And like, he pops his cap at an ultimate point. The pop cap of the mushroom comes off, and he's happy, and he's done.
And there's a moment where you're inside the mushroom, and you hear like, like. You know what I mean? Yes. And he's like sweating. Okay. All right. We're going a little off thing here, but so aside from brands, maybe that's too on the spotty also. Like, things that were exciting, things that were tired. And I don't need brands because we don't want to throw anyone under the bus, obviously. But perhaps like what sparked joy and what you were like, okay.
Yeah. Well, okay. I was going to make a joke about the Anna Whiteman brand being tired at Expo West, but
no, you're never tired.
It could never be. What sparked joy? So you know me and you know my bent. I think what was nice, I think that like again, I mentioned it earlier, but carbs and sugar were not evil. I think there was this like recognition that bread can be gluten-free, but you can still enjoy bread. Like the two are not polar opposites. So I saw a couple of brands that were like actively pushing carbs, which I found refreshing. I thought it was very interesting, the like sub thread of like Ozempic or GLP-1 adjacent brands. There were some that were very on the nose. There were some that was like, we're good for you if you are on Ozempic. And then there were some that were taking the cues of Ozempic, which is healthy and responsible kind of snacking and blood sugar regulation and all of these things, and kind of putting them into a big, like broader message around thoughtful consumption. So I thought just the impact of, you know, the GLP-1 Ozempic economy on Expo was apparent and real. One funny observation I had was that we're in the way that we used to like milk everything. We're drawing water from everywhere now. There was water from the sky, from cactuses, from mountains, from every which way. So that was
from moss, from algae.
There was
from
so
wood.
much like and water from places I didn't think were wet. And I saw a lot of kind of interesting new innovation in like ethnic and particularly Asian food. So that was where a lot of my sampling was done, was on kind of
I would call it the botchanification of
Expo.
Yeah, I think I might have just coined that, but yeah, it felt like a lot of really great, delicious sauces for dumplings and noodles in squeezy bottles.
Yes, squeezy bottles was another theme. And I guess the other thing that I thought was that kind of makes me giggle about Expo, especially, you know, knowing what it looked like 10 years ago, and people know what it looks like even way before that, was how many like celebrities were there. I feel like I was bumping into like people that are really known, like John Legend and Chrissy Teigen, just walking down a hall. And it really just is interesting how much consumer and pop culture have
going in the movie. One thing I want to touch on, because I think you also touched on it, and I want to hear your gut reaction to this, because when you sent me a couple of notes, one thing I extracted is like, I think in the quest to be more rational, more realistic, brands have also maybe taken a little bit more time to focus on who exactly they're speaking to and what exactly they're saying to those people. Because we realize now that that is very important. It's kind of 101, and yet a lot of 101 things kind of went out the window during the GoGo years. So all of this leads me to think like what you said about the Ozempic, that tracks, right? Because it's like, okay, we are talking to menopausal women who are suffering from symptoms but do not want to take hormone replacement. Here's our booth. Or we are speaking to dudes who are tired of being told that they shouldn't be dudes. And we want to just completely lean into them. Or, you know, even Gen Z, right? Like it's like a specific, very clear path to, I understand who you are targeting. And it didn't feel like everyone was targeting the same group of people, which I feel like has felt like that for a little while. I'm happy people are finally targeting menopausal women. We have a lot of money to spend and we make
Yes.
all of the household decisions, and
Yeah.
it's really not fun. So thank you,
Yeah.
menopause companies.
Well,
I'm available
I saw
if you
that
want to
on
send me some.
Mixers, I think that you're talking about. They had a great
Mm-hmm.
presence and they had great tracksuits.
Mm-hmm. Lots of
I
tracksuits.
think you're I think you're super right. And I think if you invert that to being from the investor perspective, doesn't that feel like a smarter use of resources to target
Yep.
a specific audience with a specific need state? Like if you literally boil it down to the brass tacks of like, what are you buying keywords for on Google? It has to be
Mm-hmm.
very targeted and very specific and a good use of spend. And the more kind of lasered into a particular product or focus and consumer community you can be, the more efficient that dollar is going to be. So I think it could be, I mean, this is again coming from the financial kind of view of it, is
Mm-hmm.
it could just be a very stark rationalization of how money gets spent and what the most efficient use of
Yeah.
limited resources is.
Which is what breeds creativity, right? I mean, that's the
Right.
whole, it's like when the whole thing is flooded, we like it. I mean,
Yeah.
it's been sad for a lot of reasons, but it's also, in a way, a good thing probably for these brands, including my own. And I want to go back to the sugar thing for a second, because
Yeah.
I think 2 people out of God knows how many thousands I sampled were like, oh, it has cane sugar. And just going from a brand's perspective on what you were saying, we started formulating with date paste and apricot juice like we do with our fresh line. And it just didn't taste as good.
Right.
I mean, and I think people are starting, I think there's something about the keto thing that went on much longer than everyone thought it was going to, where there was this sort of conclusion, I think, albeit false, that
Yeah.
if it serves a dietary need, it doesn't need
Yeah.
to taste good, or it can have a really bad aftertaste, or it can
Right.
taste like cardboard. Because that keto group, I think they don't tend to care so much about
Yeah.
taste because it's all about their macros or whatever, but they are still niche. And I think maybe, and you would know much better than me, that seems to be kind of winding down a bit or flattening maybe. And then the idea that like, as long as they're under 2 grams of sugar, you'd have to use a ton of date paste. You would really impact the flavor. It's not that much better from like an insulin perspective. I know people are going to be like, yes, it is. But, and the thing about sugar is it's a lot like sodium in the sense that it makes other things better. It's not just an ingredient. It is actually like a flavor builder for spice and for acid and, for that umami flavor. So I can tell you, like, we were like, oh, is this going to be a problem? Are we still able to call ourselves Better For You? And like, we fully are. It's just, there was an actual decision, I think. And it was in the context of this also. Yeah.
And I don't think that's rare. I think it's great that you went through the exercise of all of the alternatives and landed on what seems to be, like, after all, a very human conclusion, which is that like everything in moderation is fine. And I think people maybe also, like you mentioned, what was a bit tired. And I think what people did get tired of was overly functional kind of products that were claiming to check so many boxes that at the end of the day probably were overpromising and under-delivering. And as it turns out, the consumer was paying up for that overpromise and disappointed by that under-delivery. So I think there's again been this return to this pragmatism. I remember it's funny you tell this story, and it reminds me of like way back when I was working on a brand and I was like brand new to growth investing, and we were having like a very heated debate about the consumer perception of 0 calories versus 10 calories and how many customers we would churn by creating a formulation that had 8 to 10 calories and what that would do, like who would care and there was a whole consulting survey commissioned around what the incremental difference between 8 and 10 calories. And I wasn't like steeped in this world enough at that point to have the contextual awareness so my head was just like, oh my God, who cares? Walk around the block, like take
Right.
a walk around the
Right.
block. And I do think at the end of the day, you can overthink your way into what ends up being a very simple conclusion, which is that the intent and the high level macros are there, that this is going to make your life easier, more convenient, and it's going to be more or less better for you. It's not overcomplicated. It's a simple value prop you can understand. The consumer has limited time to think about how much
Right.
sugar, 2 grams versus 6 grams, is going to be really impactful for them in a day. And at the end of the day, that's why brand matters, because you build that
Right.
trust, you build that very transparent communication funnel where you tell your consumer there's 2 grams of sugar in this. And they say, thank you for telling me, I'll buy it. And
Right.
I think it's ultimately comes out to be quite simple, but there's a convoluted way of arriving at that answer for brands a lot of the time, I think.
Well, this is also probably going to be like an ultimately quite simple answer. And yet, for some reason, I don't know, it gets muddy for a lot of us. But so you mentioned brand, obviously, product, obviously. But, you've been in this business a long time. You've seen a lot of things come, you've seen a lot of things go, and you've seen things really become runaway. What are the, differentiators? I don't know what are the differences for the brands that you've seen that have run away? Like,
Yeah.
what there are buckets probably of special sauce. I mean, I was joking with someone. I'm like, well, if you have an 80% product margin, you're going to be able to do a lot of things that someone with a 20% product margin isn't.
Yeah.
And that's probably true. If you have a celebrity that, is the number one star on YouTube by a gazillion miles, you're probably going to be able to, but,
Right.
Those things are just sort of like at the tippy top. But what are you seeing that
for an everyday brand? I think what we laser in on your point about gross margin, I think one thing that I would instruct brands is I know how much economies of scale can do for the shift of a gross margin over time, but I would say setting yourself up structurally for success in kind of the gross margin camp from year zero. Like if I'm looking at a projection model and there's a 30 to 40 point swing on gross margin between year zero and year three, that leads me to a lot of assumptions and a lot of things that I have to believe for that to be true. So I think just the more that you can literally just start yourself off on, at least if a structurally sound, but also one that you can foresee holding for within a reasonable margin for a couple of years.
I want to hang out on this one a little bit because I have said this a few times. This is like one of the things that I unfortunately have had tears from brands that have asked me to talk to them. What Anna is saying in very simple terms is like, if you have a 15% gross margin and you're saying that in 2 years from now, you're going to have a 40% gross margin, you're not. It's just, you're not.
Yes.
Like,
I just haven't seen it.
Yeah, unless you magically figure out some sort of production thing or I have a friend who gained 25 points because he started doing his own production. He also bought a facility and that's a whole different business. But it's scale. The way that we think of scale is like, I'm going to be able to get so many more boxes or cans, or I'm going to be able to buy so much more, yuzu. It just doesn't happen that way. And I don't know why we all were somehow that became like, oh, economies of scale. Like we throw it out there like it happens in year 3. It happens in year like 20. Or the savings that you get is, 2 cents because you're ordering more pouches or whatever it is. But there are other ways to get margin other than crossing your fingers that it will come with scale. And that's really the first thing, going back to like pragmatism and not having to be sort of at the whims of the market and investors and who likes you or not. Like if you're just starting out, I mean, we didn't release one of our flavors because it was 3 points out of my margin band. It was just literally. And it seems kind of like nothing until it becomes your number one SKU, and then you're in trouble.
Right.
So I think that's like the layman's way of saying what you just said in a lovely.
Oh, I think you said it in a more elegant way. I think that's right. And I just think that the more founders know that from day zero, the healthier they're going to set themselves up for success for the future by
the less you're going to have to I don't know, schnurr, as we say, in front of investors who make you feel not like Anna, but make you feel pretty crappy a lot of the time. Okay.
Yes.
Going back to you, let's reverse engineer. So what if you were an early stage founder and you know all that you know about the way that VCs operate, the way that strategics look at companies, like what are the top 3 priorities for you as you're building your company right now?
I would say the reverse engineering piece, I think, you and I have talked about this in the past, but I think there's been this push to profitability, and to some extent it's like, yes, that's way easier said than done. But investors know that that's what VC money is for. Like at some point you're going to be subsidizing losses for growth. That's why the industry exists. And it's more just a matter for me, like on the priority stack of saying how smart are those subsidized losses going to be? Like how efficient is that use of a dollar going to be? So I would say, I don't know if I would say top 3 priorities or this, that, and the other thing. What I would say is like, when you put a dollar into a company, can you feel reasonably assured that that dollar is going into, at least medium to long-term growth initiatives, not short-term growth initiatives? And I think
that's a great way to look at it.
Yeah. And I think the short-term hits, if you will, are like, immediate channel diversification or this new channel partner that doesn't necessarily make sense for the strategy or the roadmap, but is a $2 million PO tomorrow, or like a paid marketing campaign that's like $1 in, $1 out, but doesn't build into the like retention of your customer or the long-term stickiness of the customer. So those kind of like short-term priorities actually did kind of do well over the course of the, as you say, GoGo years. But I think now the priority of smart investors and I think smart consumer brands would be the medium to longer term growth initiatives. So I think investing in existing doors, investing in same store sales growth, making sure that, when you are trying to get your message out to a new customer, it's going into a high kind of ROI, high LTV campaign. And then just like, the long-term investment in brand and growth, like R&D. I think all of that stuff is smart use of capital that makes it okay to subsidize losses.
That's so helpful because, over here in the founder world, we're looking at the VC world and we're like, wait, so they want us to grow exponentially, build a beloved brand on every marketing channel in the world, and also get profitable in the next 12 to 18 months. Like those things actually, when you put them on a sheet of paper, look like competing priorities. Like they actually are arguably competing priorities.
Right.
So we're all a little confused. But I think the way that you just broke it down is it's not like that you're expecting it to, you don't want us to fire everyone, stop marketing, stop growing so that we can show you that, we didn't lose any money this month.
Right.
You want us to invest our resources into things that will set us up for success long term, and you are willing to invest in that alongside us.
Yeah. And I'll take you back again. I mentioned when I was like too non-context adapted to know what the difference between 0 and 10 calories was. But there was a period of time
Right.
where, again, like from my philosophy and econ, college brain, I didn't understand why businesses didn't make money. I couldn't
Yeah.
concept why you would start a business and you would lose money. Like, and
I still can.
I didn't go to enough like finance classes. I didn't structurally know what VC or growth capital was. And so
Right.
this concept of losing money to ultimately make money, now it finally makes sense, because at some point you have to expand awareness, and I get it now.
Right.
Obviously, that's what I do.
Right.
But there
That's
was a
good.
period of time where I was
Yeah.
working in this industry and I did not understand why businesses lost money. And I think now what that's done has been, it's kind of strengthened this like feeling in me that when you are losing money, it has to make like total sense and justifiable sense to you and to me. And so that's the approach that I kind of have when it comes to like looking at an EBITDA negative business and trying to wrap my head around it.
Yeah, no, I'm still, I had this brick and mortar. It was profitable after 11 months, I think, there because of, I'll take some credit, but like not all the credit. I mean, I didn't really know what the hell was going on, but it was. And going into this business, we're still not profitable, but we're getting there. It was confusing, and explaining to friends and family that my business is not expected necessarily to make money, and any money that it does make is expected to go directly back in, and the basic like win is at some point someone paying me a lot for it or whatever. Like it's still a little bit, confusing to people who are like, how is it a business? And yet it's shocking for them to hear how many great brands around them took 15, 20 years to actually be profitable. I guess maybe fewer now, but it is still kind of like confusing. And I think, speaking of sort of money going in to fund that gap, what ends up happening is the whole ecosystem feels it. The consumer certainly feels it. Our customers feel it, because we're not able to do the fun stuff at the store level. There's just less risk taking, fewer people, get hired, which again, to your point from the beginning, is a good thing in a lot of ways, because a lot of that happened and then it just came very abruptly to a stop. And too many people, in my opinion, have been hired and, fired because of poor management. And I just really feel that way. But there's also there's this balance, I think. Do you think we're getting close to a time where there's more tolerance for risk and more investment again into the sector? Everything is cyclical. I don't think we're there yet, but we had a really long GoGo years. I mean, it was longer than I thought it was going to be. And I guess there are still things that are getting funded at really strange valuations. But it also feels like right now, and again, my founder hat on, there's a lot of predatory deals happening.
Yep.
Maybe you don't agree with the word, but it feels a little like it. And the valuations are, I think, kind of unfair in a lot of ways to the brands and the founders. Do you have an idea or a thought, or do you guys have any theses around when this might start to even out?
When and how? I do. I think I balance my optimism about, deployment and deals getting done against by who and how. Yes. Well, there's certainly there's like a whole lot of socio-political events happening in the next couple of months and years that will dictate a lot of how things go. But I will say that the negative in me says that, when things pick back up, that makes the industry more attractive to tourist capital again, and that comes back, and then we repeat the cycle. I don't think I'm that much of like a pessimist by nature. I think, again, that points to just kind of the consistency of focus and the steadiness of approach that I think we've had and we've tried to have, which is kind of helps blot out the noise of what everybody else is doing and how everybody else is doing things, and allows us to focus on what does a coefficient deal look like, and who, like, all of the data that we have on the world from the last year and also from the last 5 years. What does that tell us about where things are trending? And so I think we probably have remained and will continue to remain as active as ever, and do the same kind of diligence that we've always done. I think that one thing that I find interesting that I would use as a signal for risk tolerance and the world changing, there's kind of two things I think that I look at and have used as bellwethers for the consumer investment landscape writ large is, number one, I think like corporate venture is interesting to watch. When corporate venture capital slows down, it's because the big public corporate companies that are behind that capital have refocused their priorities on immediate accretion to shareholder value. So I think if you see them able to start to invest in new innovation and new ideas and concepts, that typically means that like the rest of the consumer ecosystem is a lagging indicator. That's just like one anecdotal one. And then, I mean, you said it, like predatory capital. I think the risk is so well kind of envisioned through the lens of what types of term sheets are being issued. And I think in a time where people are clutching their pearls, they're putting huge, liquidation preferences on everything, and they're just focused on downside protection, not upside. And there's a lot of good and bad that comes with when you start to de-risk term sheets and you start to just let capital flow. And but at the same time, I think what that does is it creates more abundance for more companies that are deserving and right to go out and get it.
Yeah.
So I think when the structure, to your point, comes off of some of those term sheets and you see investors having a little bit more of that, like, upside viewpoint rather than downside protection orientation, then we're trending in a good way.
I love that. Well, you and I very early on talked about the word conviction. Because you guys have always, no VC is a perfect fit for every fund, but I continue to be sort of amazed that there isn't like a herd mentality with you. It's not like we don't want to be the only ones who blah blah blah, or everyone's doing this, so we got to get in.
Right.
I feel like a lot of funds they need to get that conviction back, so they know who and how they want to invest. But I love the thing about the corporate venture, because I do feel like there's, at least at our booth, there was like some interesting activity going on, and people were talking. Yeah. Obviously we're years away, but I was like, you're still here, so that was cool.
Yes.
Anyway, Anna, thank you so much. I knew this was going to be, we didn't get to talk about architecture, but we can talk about scaffolding and foundation and all that, angles, space. But we did talk about a lot of what, makes you so special, and why I love talking to you so much. So thank you so much for coming on the show.
I'm so honored that you asked me and that you've had me, and I love what you're doing. And so thank you for allowing me into this space. I very much appreciate it.
Thank you. And Liam, as always, thank you for engineering the space, making it possible.
You, Liam.
You're the best. And everyone else, I hope you're recovered and you're feeling good. And for those of you who didn't go, I know it can make you a little FOMO-y. I know that we've all been talking about it. It will die down soon enough, and we'll be on to the next. And you didn't miss anything. Don't worry. Everything's fine.
You missed?
You missed, yeah, some people with mushroom costumes running around bumping into things. But, and everyone, I will be back.
You can tune into the movie.
Yeah, exactly. I'm going to do a GoFundMe for the movie and the musical. And a board game. I have so many like fun, ridiculous
I will
things
play
that
the
no one.
mushroom man.
I know. By the way, I mean that's coming.
Okay.
I'll be back next week with another episode of In the Sauce. In the Sauce is powered by Simplecast. Thanks for listening to Heritage Radio Network, food radio supported by you. Keep in touch at heritageradionetwork.org/subscribe.
Hey listeners, we're nearing the end of our 15th anniversary fundraising campaign, and we need your help to meet our goal. This campaign offers you a chance to win a unique food and music experience in one of the most exciting cities in America. Here's how it works. Donate to HRN and you'll be entered to win dinner for two and 2 tickets to a concert in one of 8 amazing cities: New York, Los Angeles, Philadelphia, Nashville, Las Vegas, Charleston, Ardmore, Pennsylvania, and Asheville. All donations support our work educating food system storytellers. And when you donate, you can choose one of those cities and you'll be entered to win dinner and 2 tickets to a show. So help us reach our goal and enter to win dinner and a show in the city of your choice. Check out heritageradionetwork.org/15 to donate and enter to win today. That's heritageradionetwork.org/15. Thank you.